Hello traders, this is Rich from tradesight. Wanted to take a little time here and talk about a stock call that we had in Netflix today, and also just talk about the kind of the mechanics of how tradesight works. It sounds complicated, but it's actually really not. We had a setup present itself in Netflix today that really was outstanding, and it was something that we were kind of on guard for fairly early in the day, and we used our techniques from tradesight to really hone in on what could be a very big trade, and for me it was the biggest trade of the year so far intraday. In this particular video, we're going to be talking about the measure move techniques, entry, and risk control, and also how tradesight gets this information right to your desktop in real time so that you can profit from this. First thing we're going to do is I'm going to roll back here and talk about the things that we were discussing this morning in the trading lab, which is our real-time uh, chat room that we talk about stocks and setups in the market. We're going through our pre-market analysis, just talking about what the current levels were, what the price action was domestically and overseas, what the intra-markets were doing as far as the commodities, the dollar, and the other intermarket assets, to see kind of what kind of data to expect. And one of the things that we did was we did a little bit of a sidebar where we talked about the news that was out on Netflix, and also what was to be expected after trading began on Tuesday, October 22nd, 2013. Now, one of the things that we were discussing in the trading lab, starting about 9 o'clock Eastern time this morning, was we pulled up a chart of Google, because that was the most recent point of reference regarding an earnings release and then the price action that came after the earnings release. I talked about how Google had really been in very much a lateral trading range here for many months before the earnings release, really just kind of consolidating and winding up with power. See, Google's over here on the left on the screen here. You can see how we were just kind of just vacillating back and forth in this trading range. And then when the earnings came out, I'm going to advance forward here in time. And when the earnings came out, we had this just explosive breakaway gap to the upside because of releasing all of this wound up energy that was just built into this pattern. The stock had done a lot of very good work, just building up strength in this pattern here that ultimately was released when it produced the positive earnings result and had that positive guidance to go with it. So we had a pretty spectacular move in Google, which took it above the 1,000 mark for the first time since it's been public. Now, while this move was very special, without a doubt, the point of talking about Google was that the setup in Netflix was nothing like the setup in Google. Now, if I can turn your attention here to the right, Netflix had this breakaway gap to the upside here from a previous earnings report, and since then had really had a very nice and extended move to the upside here. The breakaway gap here originated below the 160 level. I'm sorry, the 180 level. Gapped up and had been climbing all the way up to 350 before we were going to head into the earnings report. So this is a very massive move to the upside here of traders and investors accumulating shares over an extended period of time. And you can see the difference in the trading pattern. This is the same time period here. The Google over here was trading laterally, just kind of winding itself up with potential energy to move either way. In this case, it moved to the upside because the earnings result was very positive. But the Netflix had already expended a lot of energy to the upside here before the earnings report. So while the Google report was very positive and people were expecting a good release of energy to the upside after the Netflix report, the difference was the Netflix had already released a great deal of energy to the upside here before the report. Now I've just expanded the Netflix chart to go forward in time again. This is the result of the trading after the report. It gapped up very significantly, as did Google over here. But the difference was that Netflix opened at the high of the day and closed at the low. And not only did it close at the low of the day, it closed exactly where it should have, relative to the pattern and also relative to where it opened today and also where it closed on the previous session. We're going to talk about that in just a little bit. That's a measured move technique. But the difference here is that Google had all this energy wound up and it gapped to the upside and was able to hold the gap open. Netflix had a very aggressive angle of ascent here going into the report, gapped up, and they could not hold the gap and ultimately closed down. So what we discussed pre-market was that we were looking for a gap and failure here potential in Netflix rather than a gap and hold or a gap and go in the case of Google. Google opened down here, as you can see, and closed at the high of the day. Netflix did just the opposite, closed at the high of the day, closed at the low, and closed where we thought it was going to close today. So now I just want to take a moment. I'm going to drill down to a much smaller time frame chart. These are the daily charts. Let's go down to the 5-minute charts and talk about the opening and the setup for the actual short sale and how to manage that trade, and also how to anticipate your objective as to where this stock may go intraday. All right, so here's a look at the Netflix chart in daily bars. So you can see that we've got the regular session data only provided here. You can see that we had an up day preceding this, which was actually a pretty big up day. It doesn't look like much because of the way the chart is scaled. But the important part is that what you really want to do is you really want to wait for the opening range to set up, because there's obviously a lot of shorts involved here, both long on the long side and on the defensive mode covering shorts. Longs are involved, potentially adding to positions or taking profits and selling into it. So you need to give the market a period of time to digest this and to kind of sort itself out. And what I like to do is just step aside for the opening 5 minutes of play and just let some kind of a bias develop. And for any bias to develop, it takes a certain amount of time. And in my opinion, the little 5-minute window at the beginning of regular session trading is very important. So depending on the bias of the first 5-minute candle, it can give you a very good indication as to where you think the stock may trade, and also will define some levels for you. Now the key thing with Netflix is that we were already kind of predisposed to think that there was potential for this to trade to the downside, unlike Google that had potential to trade to the upside because of the setup that we discussed before. So what we've done here is I've just highlighted the opening 5-minute range, which is very important. Let the first 5 minutes shake out. You get the retail orders out of the way. The market makers have a moment to kind of catch their breath and then start to square their books. And then you also have a chance for additional institutional orders to start to come into the market that are really going to control trade for the rest of the day. So once those institutional orders start to come into the market to follow on to their initial bidding and offering, then you get a real bias for the day. So in this case, we had a real nice setup in Netflix. So here's a screenshot of the tradesight Twitter feed, and this is one of the ways that we communicate our trade ideas to our subscribers. You can see down, if I can point your attention down here, you'll see this entry here. It says scalp idea, Netflix under a 5-minute low. So what that means is we want to short Netflix if it breaks under the low of the first 5-minute candle. This is put out in real time to the tradesight subscribers via our Twitter feed and also our proprietary RSS feed that they can access as well. So either way, the subscribers got the information in real time just a few minutes before the trade actually triggered, as the 5-minute bar was starting to reveal itself to the downside today. So what we did was then we start to put the trade into action. Traders got the alert. They start to enter their orders. And let's take a look at how this trade played out for the subscribers. So here's what you see as a trader looking at the opening range here as trading just starts to reveal itself in the first 5 minutes of trade. We had an open up here around 388, and then we had a fairly low close here in the first 5 minute bar. So the first 5 minute candle here was a distribution candle where the sellers were winning the bar. Granted, it's only a 5 minute bar, but we want to stand aside and let that set itself. So the aggressive entry is going to be to short the stock as it breaks the first 5 minute low after that's been set. First 5 minute low was under 382.20. So the aggressive players were getting short as soon as it broke 382.20 with a market order. So sliding forward in time, here's a look at how the play actually finished out. We broke under the first 5 minute low. There was a little bit of a bump back to the upside. The stop on the trade is the high of the day, the intraday high, first 5 minute candle high. If we exceed that high, that means the trade's null and void. That means the breakdown was false, and then we have to step aside. Ultimately may go lower, but it doesn't mean it can't go higher still. But that wasn't the case here. We had a fairly decent move to the downside here. It was fairly linear. You can see that there were no positive 5 minute candles here until we got at least well into the half gap fill. We had talked about a couple of other levels to take some partials along the way in the live trading lab. We looked at the half gap fill, which was the midpoint between yesterday's close and today's open. That was the first point. The LPT was another point to take a little bit off, and then there were some other levels as well. But this trade actually went pretty much exactly where it was supposed to. I'm just going to take a moment now and flip over to the 5 minute chart, the 15-minute chart, and talk about the measure move technique. All right, so here's a look at the 15-minute bars. Looks fairly similar, but use the 15-minute bars just to make it a little bit easier to use the measure move technique. So the important price points to use the measure move technique are going to be the day's open and the previous day's close. And when you get a negative candle like this, you have to be prepared for the reciprocal range move. Now, I don't want to talk about that too much. That's something that we can talk about in the trading lab or one-on-one if you like. But the easiest way to do it, and I'll tell you this right now, is to use the Fibonacci tool to project where you expect the stock to trade. So what you expect is the open up here, down to the close, and then a measured move with an equal and opposite move to the downside here. And what I'm going to do is I'm going to take the Fibonacci's and put them on here just as a measurement tool and show exactly how that worked out. All right, so here's a look at the same chart now. Now I've applied a Fibonacci retracement. What you do is you take the tool, you grab the opening price of the day, you span that down until you get the 50% line on the Fibonacci tool to match up with the previous day's close or settlement if you're using this for futures, and then keep spanning it to the downside until that zero line gets down to that close. In this case, came in at 322 and a quarter roughly, and that was our measured move target. So while we opened up here, we sold the first 5 minute low, and keep in mind we sold it higher than this. We sold it at 382.20. As we decline to the downside here and fill the gap, you see this big tail here. They bought the gap fill on the initial try, bounced back up here, but what happened? This next candle is actually one of the biggest candles of the day here and crushed it to the downside as soon as the gap fill buyers' demand was exhausted. And then we continue to the downside here to meet the reciprocal range target at 322 and a quarter. So this is just one of the techniques that we use at tradesight to maximize our profits and to really make sure that we're on the right side of trade and not looking to fade this. A lot of traders got completely hosed today. If they bought the gap fill, they got buried, and if they bought any point lower than the reciprocal range target on this measured move, they got buried in this thing today. So the only play today, because of the design of the chart, was on the short side. And you had to be on the short side all day long. At no point today did we talk about going long Netflix, not even for a second. Well, as always, thanks for listening. This has been Rich for Tradesight. If you would like to learn more about the techniques that we use please feel free to take a trial. You can contact us via our website at tradesight.com. And I wish you well, and hope to see you again soon. Thanks for listening.